Anyway, I want to talk about the 4 sections of the government that Keynes talks about. And when you think about that, you can see exactly why things are so incredibly topsy-turvy. And talk about being on sand, we definitely are. And first I want to talk about, this is the 4 parts of government: economy's output of goods and services. Well, that's GDP. So before I get to these 4 sections, I want to talk about GDP. That's gross domestic product. And most people just, accept that's sum of goods and services, and it's supposed to go up. Well, the sicker we are as a country, health-wise, the more the GDP goes up, because that's included in GDP. So that's another sand thing, where you're on sand, the health of the country. Also, the destruction of the environment. More trees you cut down and pollute the water. All of that makes GDP go up. But if this was a real business, that would be, your assets. That's an asset should be going down. The health of the country should pull it down. So my point is that the GDP is the most erroneous number you could possibly put out as a symbol of the health of the economy.
Well, let's put the...
And there's been a lot of discussion about that is a wrong number.
Let's talk about the consumer's role in this, because we talked about this a little earlier.
Yeah,
and certainly consumer confidence has been down. Consumers is incredibly in debt, as you pointed out, and yet there is a willingness to spend, and that could be because it's the holiday season. It could be psychological, because we're seeing gas prices fall so drastically. I filled up for $20 today, and I think that does have an effect.
It gives feel weird, doesn't it?
It feels very, very weird, but I think that has an effect on people's psyches. You're losing all this money in the stock market, but you're paying less at the pump, and you get a false sense of security, maybe that things are a little better. And is that how does that work into what?
Well, it's the season. The push to spend is so powerful. The whole consumer economy is built on from Thanksgiving to the end of the year.
And you're going to miss out if you don't go out there and get it.
You miss out. And so, and the American public does not respond well to limitations. That's just bottom line. That's what we are. As I put in that column, there's always more stuff on the other side of the mountain, more resources to use up, more trees to cut down, and so this is a profound hit to our psyche. And meanwhile, but the business community doesn't throttle down easily, so it's still going full bore. And this is the season when, as I understand it, I've forgotten the percentage, 50% or better. Of their sales are in this period.
Sure.
So and just it's Christmas, you want to think about your kids, and it's holidays for various other groups, and so they really want to spend money. It's just the way it is.
And let's talk about this effect, though, as we brought up before on the GDP. We're talking about the 4 components. So we have the consumer.
Right. We have the consumer, and as I said, it's 72%. And of course the consumer now has a lot of anxiety, fear, and quite justified, absolutely justified, and so they're cautious. But the energy of the season keeps them going to some degree. But an interesting thing is people are also thinking about making things as gifts. Mm-hmm. That's a shift.
Well, maybe we could move back a little bit to tradition. That might not be a bad thing. But
not bad at all.